please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Indianomics. There is no doubt that in the year 2018, Indian macros have been on a steady, albeit slow decline. The reasons are not far to seek. Three major reasons: crude, and crude. Thanks to crude prices, both trade deficit and current account deficit look like seriously widening. We've already seen it in the trade deficit and eventually we'll see it in the current account deficit numbers, which come with a lag. And secondly, the impact is on inflation. While now the inflation trajectory is still seen under 5%, it will not be long before the year-end numbers, our year-end forecasts are upped by both the Reserve Bank and the markets to perhaps 5% or even higher. And the third macro which could be under threat is the fiscal deficit, either because of lowering of excise or because of populist giveaways in an election year. Today what we are discussing is, has the political risk gotten a little worse because of the Karnataka polls and what the results might be? And secondly, have the other macro indicators also declined just a bit, with crude now touching $78? My guests to discuss these issues are Anant Narayan, Professor of Finance at SPJ Institute of Management, Craig Chan, the Head of Global Emerging Market FX Strategy at Nomura, and Badri Nivas, the Managing Director, Country Treasurer and Head of Trading and Local Markets Treasury at Citi. Gentlemen, thank you very much for joining me. Well, let me start with the outsider, so to speak, because Craig is joining us from Singapore, so geographically at least an outsider. Craig, how are you approaching this, provincial or state election? The BJP is not seen as first in the race. It could well emerge as first in the race. So two scenarios for you. If the BJP were to win, do you think FX becomes less of a problem in India and India's underperforming currency could become more stable?
Well, I think at least in the short run, if the BJP were to win a majority in the upcoming state elections, it would be a very positive surprise to the markets. I do believe that we would see a sharp rise in the rupee. I would be expecting possibly around a 100 basis points rally or so in the rupee against the dollar. I think what it would also do, this is important because clearly there's a build-up in election concerns, when we had the by-election results in March. I think if there was to be a solid win in Karnataka, then it would set expectations of the market for November, December, when we have some other key state elections coming through. I think that along with that, it clearly would reduce fiscal slippage, kind of populism-related risks as well. I think the fear would be that if BJP did very badly in this upcoming election, that there could be some form of populism policies, additional populism policies coming out. So overall, if there is a positive political result that comes through in this upcoming election, I think some of the negatives which have kind of roiled the markets in India, they're somewhat in the price. I do think that we could have quite a sharp rally in the rupee. Clearly, as you've mentioned, the global conditions, it's going to be very important to see whether oil prices can stabilize, whether the dollar can also come back from the recent rally as well.
Yep. There are, of course, those other factors which will always come back and impact the exchange rate. But Craig, 1 percentage point possible rally in the rupee if the BJP were to get Karnataka. But what if it didn't bag? What if the Congress got a majority? It's not even a hung assembly, but it is a Congress majority. Do you think the rupee reacts adversely, or is that in the price?
Well, I think that the first reaction would be that dollar rupee would be trading higher. I would say probably 50 basis points, 100 basis points higher. I think the negative reaction probably won't be as severe as people might think. But the reality is, the BJP, I mean, they currently hold, 44 out of 224 seats in Karnataka.
Yes.
And so, if you think about it from that perspective, it seems like, perhaps there's actually only upside risks that we could see, upside positive risks for the BJP at least. But I do agree that if there really is a very big loss that comes through, that this populism policy concerns will rise, and obviously, concerns about, some of the key state elections coming towards the end of the year. And obviously with that, you could have, the portfolio outflows from foreigners continuing.
Yep.
And then, as you mentioned, concerns about the current account and fiscal deficits kind of coming back into the limelight again.
Sure. Well, let me toss the same question to the professor. Anant, what's your sense? 1% upside risk for the rupee and maybe 50 basis downside risk. Is that a fair measure of what we will be in for next week?
I think it's a fair measure, Lata. I would possibly say 1% upside on rupee will probably the dollar will probably get bought up again at that point in time. Stepping back a bit, while the immediate event is obviously the Karnataka elections, as you framed it, the whole context around the rupee right now isn't looking great. And you mentioned some of the negatives, right? Our current account deficit for the last fiscal FY18 was the worst we've seen in the last 5 years. It's probably going to be in between $45 to $50 billion.
Yes.
Our fiscal deficit is clearly looking creaky as well. Even without oil prices being where they are, we've been, ambitious on the revenue targets. We've been probably underplayed the expense targets, given an election year where we are going to try and do things to MSP, etc. On the political side, even if Karnataka elections go off well for the BJP, that still isn't a get-out-of-jail-free card as far as the overall general elections is concerned. And the uncertainty there will probably continue to hover around the markets. Fourth, oil prices. Especially given the geopolitical situation, what happens to oil and energy prices is a big question mark, which will unfortunately remain for us. So all of these points will still linger on, irrespective of what happens to Karnataka. Now, to that, I would add two other factors. One is our permanent flows across current account deficit, across FDI, and even FPI and equity have started to turn negative again. In fiscal year 18, we saw about $15 billion negative flow arising from these permanent flows, right? And to add to that, we also have an overhang of carry chasing non-permanent fair weather flows, which have come in over the last 4 years, given the relative stability of the rupee and the Indian macro and the volatility being low on the rupee side. So, at last count, that number was over $110 billion built up over the last 4 years. And that is a huge amount of vulnerability which is lying in the system. And we are seeing signs of that. The outflows we saw in the last 1 month probably is a reduction of that carry trade going through as the market starts to become nervous. So given all this overhang, I think the pressure on the rupee will remain unless we can see some of the permanent flows reverse.
Okay. Well, I wanted to ask exactly that to Badri. Will Karnataka be a one-day event, even if it is a very positive result for the central government, given what Anant is talking about, and any possible renewed pressure on crude because of Iran and because of the inherent nature of demand, if crude were to cross 78? Do you think that, we are exaggerating Karnataka?
Yeah, so definitely, this Karnataka is not going to be a big driver beyond a day or two. In fact, in difference a little bit to what Mr. Craig said, I think that if BJP does well, people and rupee rallies, people will probably use that as an opportunity to go long dollar rupee. And the risk is a little bit asymmetric in the sense that if BJP does not do very well or does poorly in relative to expectations, that can actually accentuate some of the macro risks and political risk, which can lead to a more sharper move higher on the dollar rupee. So I feel that, the Karnataka itself is a little bit of a day, 2 day kind of a thing, unless there are some dramatic surprises prices, but by and large, the rupee story is less about political risk at this point in time, and largely more about the current account deficit and the ability for us to finance it, given continued pressure on the oil as well as the global context.
Okay. So, well, if I have to ask you, Badri, for a range of the rupee and a likely average for the rest of 2018, what would that be?
So, let's just look at what is a challenge, right, for the rupee. The current account deficit, as per our estimates, could be 65 billion this year, and that is assuming an oil less than 65 on an average, because you'll have to look at oil prices over an average. And yes, today they're quite high, but we've seen oil prices being quite volatile and can move. A $10 move in oil prices, let's say from instead of 65 it is 75 on an average, that adds about $12 to $14 billion additional current account deficit. So assuming oil averages instead of the 62 to 65 that we have considered, if it averages about 70 or 72, then you're talking about a current account deficit upwards of $70 billion. Yes. Now financing that is going to be is the challenge. As Anand said, the portfolio flows, which have actually financed our deficit in the last few years, could actually be now adding to the pressure rather than financing it. So financing that is going to be a challenge. The dollar rupee, if you look at it again in context, it's not really depreciated too much. If you look at it's about 4.5% depreciation. If you look at over the last 6 months, if you look at 1 year, even over a 3-year period, we're talking about less than 5% depreciation. Yes. So, I think there is no cause for any panic at this point in time. Yes, there are, CAD financing challenges, but at the end of the day, it is, and the geopoliticals on oil do look bad in the sense that it looks like it could keep oil prices high for a long. So obviously we need to be prepared, we need to be cautious. But a lot of people are drawing reference to 2013 and so on, right? But when you look at 2013, we had like a 17 or 18% depreciation on the currency over a 15, 18-month period. Right now, it's nowhere close to those kind of scenarios. Our reserves are much better. We do have, I know that it's an election year, but at the end of the day, it's still a politically stable environment. The growth conditions are quite strong. Fiscal deficit, again, drawing parallel to 2012-13 period, they were running about, the central government was running about 5.5 to 6. Today we are at about 3.5%. So clearly the macro is fundamentally better than 2013. The depreciation on the rupee so far has been relatively, benign. We do foresee the fact that if oil prices remain high, we could have a problem, but that's more in terms of anticipating and preparing contingencies rather than panicking at this point, is what I would say.
Okay. Well, I wanted to toss the same range and average question to my two guests.
Just to give you
Badri, I'll just come back to you. We have to take a mandatory break. I'm back in a jiffy and get, targets for the currency and even the bonds from my guests. We are back in a jiffy. Welcome back to this special Indianomics. We are discussing Indian macros, especially in the light of the upcoming Karnataka polls and what the results might do to the various macros, to current account deficit, fiscal deficit, and to the rupee. Well, we heard that Craig Chan of Nomura saying that the upward push on the rupee can be as much as 1% if the Karnataka polls went in favor of the ruling party in the centre. That would be an indication of confidence that foreigners would show. But Craig, exactly that question to you. If indeed the Karnataka polls go in favour of the ruling party, do you see foreign investors buying Indian bonds? A large part of the exit is actually coming from FII bond investors. Will they find it good enough to stay if the verdict were positive? And on the other hand, if the verdict were negative, are you expecting that kind of depreciation in the rupee that you're talking about, are you expecting bond investors to leg it out?
Yeah, so I think that at least from the bond side, foreigners there has already been quite a significant exodus from foreigners. You know, we've seen around $3 billion of foreign outflows since the start of this year. So the positioning adjustment has been already quite significant. I mean, that's been in the backdrop, if you think about it, about political concerns. It's been a backdrop of higher oil prices. It's been a backdrop of broad dollar bids, higher U.S. yields. We have had a lot of negatives. So I do think that if we can get through this Karnataka election with a positive spin around BJP, then of course there's going to be a kind of a period of quietness until Q4. I think the market can get more positive, at least from the political angle. People will get much more excited about how BJP may do well towards the end of the year, may even call on earlier general election as well. So I think that the politics can become positive. Now, what's going to be very important is going to be the kind of global oil price environment, global monetary policy normalization. If the politics can progress positively, I certainly think that we can have a significant outperformance of rupee versus the forward market. The 12-month forward right now is saying dollar rupee should be at 70, or slightly above 70. I don't think we will see that 5% depreciation, particularly if the politics does become much more in favor of BJP.
What will you see, Craig? What is your range and what is your average for the remaining part of 2018 on dollar rupee?
Look, don't get me wrong. I think it's going to be a very challenging environment because no matter what, the global policy normalization is going to continue.
Yes.
The whole liquidity argument that we've had since QE1 from the Fed is structurally turning. And so, I do feel that, the financing of current account positions, whether it's in Asia, whether it's in India, is going to be more challenging as we move forward. But, I think what's important is that as long as there's a synchronized recovery that continues, the portfolio story into Asia, into India should remain relatively positive, which means that once you combine that with the the FDI, the financing of the current account should actually I would say it should be financed over the medium term.
Now, I'm looking for a number. I'm looking for a number, Craig. What would your range be?
I would say that we could be in, maybe around 67, 68 on dollar India by the end of this year.
At the moment, the trigger point could be hot money. In that context, do you think that the recent changes in foreign investment rules can actually prove to be absolutely wrongly timed? That suppose there is a pressure of global liquidity, there is a pressure of global oil, and the perfect storm is created by the Karnataka polls, then do you think that you're going to see much more bonds legged out?
Lata, look, our macros can turn on a dime. 18 months ago, if you had asked this question, would we be considering a deterioration of our macros to the point where we are talking about dollar rupee going to 68, 70? The answer would have been no. And true, in true style, just because oil has gone back to closer to 80 rather than to 60 as it was a year back, our entire macro situation is looking very, very different. If it does go to 100 and beyond,
68 is not a big problem for us, is it?
No, so let me come to the rupee part. Look, I do think that your point about hot money and the earlier question about FPI in debt. Look, one of the recollections you would have post the taper tantrum of May 2013 was the large outflows we saw in FPI in debt, right? They were primarily on account of two reasons. One was a lot of the debt was in short-term paper, which were essentially arbitrage flows, taking advantage of the differences in the NDF FX market and the onshore FX market. Now, that part has been plugged or had been plugged subsequently when RBI put in that rule of 3-year minimum maturity for FPI debt investments. The other reasons why FPI debt can potentially be vulnerable, and Craig is right, over the last 1 year, we've seen a sharp increase in bond yields and some volatility in FX as well. a $3 billion outflow in debt is not much given an overall $70 billion portfolio that we have. So it's actually been quite well behaved over the last few months. Yet that aura of vulnerability remains because unlike the equity markets, which are part of MSCI indices, our debt is not part of the global benchmark indices. To that extent, every portfolio manager who's invested in India debt is running an off-benchmark position, which could be vulnerable if our macros were to turn.
Badri, actually running out of time. So your thoughts on how the bond market will behave? Aside from all the positives that you mentioned in terms of our fiscal deficit being at 3.5, our current account deficit being much lower than what it was in 2012, 2013, we also now have an institutionalized inflation targeting central bank, which has taken its job very seriously. Therefore, I mean, rather than be concerned about the rupee, would you be more concerned about the bonds? Are we now likely to see 7.7 as the minimum on the bond markets?
Don't get me wrong. I don't, for a minute, downplay the challenges from the external front and the, fact that we have a challenge in financing the CAD, and especially since from the foreigner side, I think we would probably continue to see some continued pressure on the bonds outflows. So I don't think that we should downplay that risk. I was only making the larger point that compared to 2013, we are nowhere in a panic situation, and therefore we shouldn't really panic as a country. With regard to the question on the bonds, I think a range of 7.70 to 8% should still serve as a top. If that breaks, then obviously we're talking about new territories, and that could come with some renewed macro risks or a different kind of a policy action,
which is not on the cards for you in 2018.
We should see those levels hold.
That is not breaking 8% is certainly not on your cards, is it?
Yeah, I see. I'll put it this way. As you started at the beginning by saying crude. Everything for India, especially on the bond markets and currency, both are crude. If crude trades at 85, 90, then any levels are possible. If crude trades at 65, 60, then obviously we're talking about a much better thing. Okay. The key point is that the rest of the macros are not really that bad, and obviously we got to prepare contingencies in case crude prices were to go higher, and there are measures which the central bank can take towards managing those, and that's really what they need to focus on.
Fair point. All right, gentlemen, completely out of time. So the main takeaway from the person across the seas is that if there is a win for the NDA in the Karnataka polls, the rupee can appreciate by 1 percentage point, and the good news is that if that were not to happen, if it's not an NDA victory, there is not too much downside for the rupee. Well, the other point I want to just make is that Badri Nawaz of Citi pointing out that even if there is a lot of negativity in the bond market, the RBI will do a lot of OMOs, and that can OMOs because of currency withdrawal, and that can be a major support, and bond yields could be kept under check. But let us remember that as we get into election season, the Indian media will get very noisy, and if there are populist noises, then that can have a negative impact on the bond markets as well. So politics is got the macros. We will discuss the impact on the macros after the Karnataka polls are known. Thank you very much for joining me in this discussion.